What's up, Resource Nation? Welcome to another edition of Masterclass Series. Today we got our good friend Dave Savage all the way from Lake Oswego, who wrote an amazing article we'll get to in a second. Dave, thanks so much for joining us today, buddy.
Thanks for having me, and I'm looking forward to the conversation.
I love your studio. I love your background. It looks amazing.
Yeah,
man.
it's pretty cool, man. I'm, working out of our guest house. I've got a little green screen with a pretty nice virtual background.
I love it.
And of course, you've got the real deal, so yours is better than mine.
It looks good, man. This is probably your 52nd time on the Resource, so we appreciate it. But you wrote a really cool article this week, and it was about Rocket and about the IPO with Quicken. I'm going to get to that in a second. But my question, and I want to kind of talk about it with you and unpack it over the next 15, 20 minutes, is Rocket Mortgage stealing business for both realtors and lenders? Because they have Rocket Homes as well. It's not talked about as much, but they do have Rocket Homes. We all are well aware of Rocket Mortgage, who generated, and this is from Dave's article, amazing article, we'll put a link down below if you haven't read it, 20 million leads in 2019. They've also spent $1 billion, just a cool $1 billion in 2019 on marketing. Their revenue, by the way, guys, was 5.1 trillion with a T in 2019. They made 97 million. That was their net income. And they closed 145 billion just in 2019. Now, to compare that for reference, most of the top 10 lenders, if you average them out, do about 40 billion, and that's like the retail mortgage originators. So, absolutely crushing some folks. So are they stealing business? I guess the short answer is yes. My question to Dave is this. Is this just completely an unfair fight? Like, should we just pack up and go home? Or can we actually compete and maybe even steal market share? What do you think?
Yeah. So absolutely, it is not an unfair fight. They are a national platform. I wouldn't use the word steal. I just would use the word they are winning.
Yeah.
They are winning market share. They're gaining market share. They have a national platform. They do a great job of marketing. They do a great job of connecting all of their technology to deliver a great consumer experience. And here's the deal, guys. I didn't put it in this article, but they do a really good job of training and managing their people to use their technology and to deliver their processes in a consistent and scalable way. But I've been talking about a lot. I have more articles coming on this topic. Mm-hmm. And I think that if you are a local professional, by being locally valuable and then creating personal advice, there's, as long as human beings like human beings, I think the local mortgage professional has a massive opportunity. But we are going to compete with this national platform and other national platforms.
Yeah, they've obviously taken market share. 20 million leads is a lot. And that was the concerning, and it has been the concerning trend for me, for both realtors, lenders, and entire companies, is watching the lending trees and the rockets actually get to the consumer first. For years, that's been my concern. And for a long time, both realtors and lenders were paying people like Zillow to help them get to that consumer. And in my opinion, and you've done a lot more research than I have on this topic, but that's one of the best ways one of the top ways, in my opinion, they're winning, because they're getting to that consumer first. And that's a difficult and very expensive game to play. I love the approach that you took in going hyper-local in your article, and I think that is one of the ways that we actually do have a competitive advantage, because Rocket isn't hyper-local. Can they spend $1 billion? Yeah, we probably can't. We probably can't do that collectively as independent mortgage bankers or brokers or realtors, but we definitely can compete at the community game for sure. What are your thoughts on that?
Well, first of all, Quicken and Rocket is hyper-local, and that's their bread on brokers. So they look at that model. Our consumer direct is our national platform based off the leads that we generate and the leads that were mentioned. That's one model. And then their hyper-local strategy is to provide loans in the transaction engine for brokers. And they're obviously committed to that strategy, that channel. And for the most part, they have the best of both of those. But I would just, I think I said it in my article. I don't know if I was direct about it. There's just so much we can learn. Like, if you're a local mortgage professional, do you measure your leads monthly and yearly? Can you even accurately look and say, hey, how many leads did I generate last year? How many have I generated year to date? And how many I generate this month? Most local mortgage professionals, they don't know their metrics. And I think that's just a massive disadvantage if you are not using your CRM, if you're not taking time every month to go, okay, how many leads did I generate? What's my conversion? What are my best lead sources? Yes, I don't want to say you're going to get slaughtered, but you're choosing to run a race with the wind at your face, running uphill. Like you're making it harder on yourself if you're not measuring the metrics that matter most. And I called out what I thought those were. I think they're, leads by channel, conversion, and then I was blown away with their retention numbers. Like I did not expect to see that much retention, both purchase and refi. I thought that was really like exceptional retention. And I think most local, hyper-local mortgage professionals don't have the same metrics. They're not retaining their customers as effectively as Quicken is, which I found, like massive opportunity.
Yeah, I'm hopeful that lenders are thriving right now for obvious reasons, and realtors, depending on your state and where if they're open, they're also excelling. But I'm hoping that the conversation doesn't fall on deaf ears for lenders because they have so much business. They might say, well, Ryan, Dave, I don't really need to attract my leads because I have so many of them coming in. I can't even handle the ones that I've got coming in. Totally get that. But guys, obviously we know this is a season. This isn't going to happen, continue for forever. And so if you're ignoring these principles, if you're ignoring, tracking leads and conversion and even lead sources, when this slows down, and it will, we have all learned that lesson several times, you're going to be left looking around wondering where your business is coming from versus building it the way Dave's instructing you to, because I'm telling you again, guys, this is a season. Yes, make hay while it's there, but you have to have your lead strategies in place. You have to, what's the old saying, Dave? What you can measure, you can improve, right? And so how many people are even measuring, to your point, how many leads and where they're coming from? That's probably, I see that the least. I don't know about you. You travel more than I do. You work with pretty much every company out there. I see that the least, like actually measuring and putting them in lead sources. I see that the least. I don't know about you though.
Yeah, no, I think that's probably one of the biggest missed opportunities by most, even top performing loan officers, that they know how many people they have in their customer database. They don't necessarily know how many of those customers do they have the right contact information and the client's engaging. So who do I have an engaged relationship with? They don't, and they should. And they're not every month measuring, okay, how many loans did I do with past customers? What is my past customer pull-through rate monthly and annually? And I do think it's the biggest miss. And I really don't think this busy market is a good excuse. It is an excuse, but let's face it. We're busy. You're busier than ever, but you're also in a good mood. You're killing it. You're making a lot of money. Yeah. You're well resourced.
Right.
You're feeling good. So I really think it's just a question of prioritizing those things. Like there's never going to be a better time where if you're a team loan officer, either designated team to retention or hire a team member designated to retention. Like there's never going to be a time where it's easier to resource and fine tune your retention strategies. So I think saying, oh, hey, we're busy as an excuse, I think it's a bad excuse. And I think it's a big mistake. I would say now is the time to crush it.
I didn't think we were going to go there today, but kind of a recent story to your point on retention and hiring and scaling in one of the best times to scale because you have money and resources to do so. I was talking with an originator. I think she did $150 million last year. Very, very good originator. And awesome. 95% of that was purchase. And so many lenders fall into that trap of bragging about being 95% purchase or 90% purchase and acting like that's a good thing. It is a good thing. You got a lot of purchase, but there's also retention and so many families that can save money on a refinance transaction or debt consolidation. And I was just talking with you realize that there's probably $50 million worth of refinances that are just dripping off you right now. And she wasn't even geared to think like that. The retention conversation that you brought up in your article, she just couldn't even think because she was so stressed with the $150 million, which I get. But back to your point, scale it. Hire somebody that is geared to do annual reviews with Mortgage Coach. You helped all of those families get into the home. Do we not care about them now that rates are in the twos? Of course we do. So we've got to scale our teams to Dave's point, and you can find people that love doing that. It doesn't mean you have to take your eye off the ball and still do $150 million in purchase. great, do that. But find an individual that is passionate about helping families and passionate about retention, passionate about measuring metrics, and watch your business explode. 150 million and 95% of that was purchase. Holy smokes.
Yeah, no one has ever said it better. It was in our Facebook group, our Mortgage Coach Productivity Mastermind Facebook group, and Jeremy Forcier chimed in. It was several months ago, and it was like, if you aren't doing refis, you don't have a client for life business. So again, this is coming from a guy who his goal for the year was 300 loans, and he's going to have closed 300 loans by the end of this month,
right?
July 2020. And but that's the message. If you aren't doing the refinances for your client, just realize this: I don't have a client for life mortgage practice. And this is the thing. I mean, I don't know who you're referring to, but she's obviously a good hunter. I mean, she's obviously a great leader to agents. She's obviously an incredible mortgage professional and team leader. But I was inspired by your recent video that you did. I think it was like last week, about what a great time to bring new blood into the marketplace. So I would just speak to every loan officer. I would be willing to bet that literally 90% of loan officers that close over $100 million a loan should hire a client concierge right now. Like, there's never going to be a better time to find one, to get good talent, to bring them into the mortgage space. And 100's a big number. I would say any loan officer that has over 500 past customers, guys, think about 500 families under management where you have their contact information. That's at least 50 loans a year in a normal market. And in a great market like this, that's 70 or so transactions annually. So if you've got 500 or more clients, and for those of you that have 1,000, I mean, that's 100 plus loans a year that you're just losing if you're not managing them. And the metrics I see when I interview loan officers, it's about 30%. So if I have 1,000, I'm getting about 30 loans a year, I think is the standard. It might be a little higher right now, but the number you guys should all be focused on is a 10% annual pull-through rate. In a normal market, it's a higher than normal market, so the number is higher.
And do you think that Quicken's retention is so high mainly because of technology and the frequent touches? What's your thoughts on that?
No, I think personally, I think Quicken's superpower is their leadership skills and their management training. The amount of resources that they put in leadership training, managing of processes, making sure that for every number of loan officers they have managers to train, oversee, and manage processes. So when you really look at their success, I think at the heart of it, it's leadership and training. Yes, they make big, bold investments in marketing. And yes, they make big, bold investments in technology, but they make even bigger and bolder investments in training and leadership skills.
One of the questions that you asked all of us reading the article to kind of answer for ourselves that I loved, and I got a follow-up question to your question, which was, can you explain your value proposition and competitive advantage in a simple, memorable way to both your borrowers and referral partners? Why do you think so many people struggle with that? I mean, you and I went to Amplify together in Seattle, and that was asked of a bunch of high-level, folks in the room, and we all kind of struggled with that too. So why do you think that is? Seems like it's such a basic question, but so hard to answer.
Yeah, it is. I don't know that I have the answer. I posted a quote on LinkedIn a couple days ago, and it was, most can see the difference between bad and good, but only the best can see the difference between good, great, and wow. And I think even, I can only speak for myself, but I mean, until I went to Amplify, I didn't know the difference between great and wow at knowing my story and telling my story. I was blind to it. Mm-hmm. And so I think it's one of those things where what we're doing is good enough. And we all know that, good is the enemy of great. Yeah. And so we never spend the time to come up with that wow value prop, because what we have is working. And I had Todd Duncan on our Friday mastermind, not today, but last Friday. And at the end, he gave a value prop script, which is just pure gold, pure money. I'm gonna actually put it in the Quicken article over the weekend. Okay. But I would push everybody. I think not just to defend yourself from Quicken, because if you're watching this, you probably are local professional that relies on referrals. And I do not think Quicken is even near your top competitor. I think the other local providers that kill it, that are using technology, they're using their CRM, they're using tools like Mortgage Coach and HomeBot and the ones that I mentioned in my article to deliver value beyond the transaction. And a phrase that I heard an executive use recently that I'm going to start talking about a lot, being a fintech-powered mortgage professional.
Love that.
Or a fintech-powered lender. Like, you don't need to be Quicken. There's a lot of great technology out there that I mentioned in my article that's awesome. Some of it's better than what Quicken has. I mean, Quicken doesn't have Mortgage Coach.
Yeah.
They don't have this incredible TCA. They don't have HomeBot.
Yep.
And so I think, it's never been easier to be a fintech-enabled local mortgage professional. And then, spend the time, get your scripts down. When you look at Ryan Grant from Fairway that did 185 million last year and became the preferred lender to Facebook, he did that because he's a fintech-enabled lender who put great marketing around that. He's got Mortgage Coach, he's got HomeBot, he's got House Happy, and then he created content around these capabilities, and he was able to get 400,000 Facebook employees to become the preferred lender. So it's all about leveraging what's out there and then marketing it in a super clean way.
I love the questions that you put in there, and quite frankly, if you're a leader running a team, you can take I think there's 5 or 6 questions in there, and you can just sit down with your team, and trust me, that's going to give you a lot of fodder to talk about. The second best one that you wrote was, do you have a platform that brings obvious value to your clients beyond the transaction? Now that should keep realtors and lenders up at night. Also, with the other question about basically defining your value proposition, if the answer is I'm not sure, like we both were pretty vulnerable in saying, that's okay. Like, you're not alone. But I want that to keep you up at night. I want you to talk, especially if you're running a mortgage office or real estate office. I want you to challenge those realtors and those lenders with that same question, and I want that question to stay in their mind until they really feel confident in inside and outside being able to articulate that. So 1, you're not alone if it's difficult, but 2, let that drive you to really answer that question, because that's going to force you to do all the habits and leverage all the technology that Dave's been talking about.
Yeah, there's no doubt. And that one where I talked about, do you have a platform that you're able to describe? I mean, that was directly inspired from the multiple interviews I've done with Ryan and just other top producers. I mean, it's what they all have in common. They are using tools effectively, but then they're putting their own marketing around those things. And it's the path forward. And I would just say, for anybody that sees Quicken as the enemy, I would look at them. Absolutely, they are a competitor, and they are a smart competitor. But now that they're public, guys, we got the S1. Might want to buy some stock so you get access to their information and use it to benchmark. Use it to see how this super smart, super successful platform is running. And then I also think it's good for our industry. I mean, it's good for the mortgage industry to have a top tier. I hope their stock offering goes well. I know a lot of people are like, I hope they crash and burn. I don't think that will serve our industry as well as having them succeed, but that's just my opinion.
And I don't think they're an enemy at all. I'm actually super impressed with what
there's
they've been
a lot.
able to do.
You see a lot of rhetoric in the market that they are. And again, guys, I just always come from this philosophy that we are our own biggest competitor, ourselves, and our ability to get clear on our personal brand, articulate our personal brand, and consistently deliver amazing experiences to families. Like, if you do that as a local pro, you're going to kill it.
Yeah, I love that, man. We'll end with that, because I hope people, again, Quicken's not the enemy. I think they set an amazing blueprint, and they make us better. They force us to get better and become that fintech-enabled originator, or that fintech-enabled realtor that Dave's talking about. And man, thank you again just for your leadership over all the years, man. Leadership's at a premium right now. So thank you for setting an amazing example, bringing a ton of positive value. Your article was amazing. If you're a realtor, yes, it is Mortgage Coach, but trust me, everything crosses over into the real estate game. We will post the link to that below. And I'll give Dave one final word before we take off.
So a final word. So Ryan, thank you for saying those nice things to me. But dude, you too. I mean, the leadership that you bring with RE Source, you guys have just upgraded your game. And as I said a few minutes ago, the difference between good and bad, everybody sees it. But the difference between good, great, and wow, dude, you are a beacon of wow. And if anybody did not listen to that video that you guys did about what a great time it is to recruit, that's the other thing. I mean, we could do a whole call on interviews that I've done. I just interviewed a guy a couple weeks ago where he's been in the business for 6 months. Imagine when you had only been there 6 months and he's closing 20 loans this month. And so he's killing it. And now that's an extreme level of success. And he didn't do it because leads are being given it to him. He was a successful salesperson in another industry. He is an experienced leader. So the guy has some skills, but it's a great time to bring new people into the business, whether that's as a loan officer assistant, a client concierge. There's just never been a better time. So I applaud you. That was great leadership. I hope people watch that. I hope people share that. And I think you should create more content like that.
I love it, man. I believe it to my core, and I hope people do share that. And pulling some of that new blood in and seeing them excel. And you're right. There's so many new young people that are excelling in the loan officer, arena, LOA arena, processor. It feels so good to bring somebody new and then look back only 6 months later, and they're happy and they're cranking out loans and they're making more money than ever. Not that it's all about money, but it's rewarding, and we need more of that. And it's a great time to bring people in right now.
Yeah, and let's face it. There's, unemployment is high. I mean, COVID has really shined a light on the mortgage industry, and it's just a great opportunity for us to lead as mortgage professionals. So get out there, bring people in, get client concierge, and execute annual reviews.
Thank you for sharing that message, because I think we both believe it. So, all right, guys, if you have any questions for Dave, tag him down below. He's super nice. I'm sure he'll answer them, and we'll put the link to his article down below, and we'll see you next week.